When it comes to trading, draw on liquidity is everything. If you don't have the correct draw on liquidity, none of your models are going to work and nothing will basically work for you. All right. Now, finding your draw on liquidity is one thing, but how do we actually identify the correct draw on liquidity? And how do we know when price is going towards that liquidity, right? All of these things, they confuse you, right? Because there are so many liquidity levels on your chart. Like there's liquidity everywhere. But you want to know where price wants to go. If you want to know how to trade towards that liquidity, then this video is going to be for you. And in this video, I'm going to teach you a secret technique that no one has ever, and I mean ever, uploaded on YouTube or anywhere else. Not even ICT and nobody basically. All right. So usually, first of all, we need to identify our drawn liquidity. So we need to know where could price go potentially, right? That's one thing. So what I like to do for my drawn liquidity, I mark out the session highs, right? So over here, let's say that we have this London session, right? All right, here we go. So we have the London high, right? This and the London low. And the New York session is about to start. But first thing first, what I want to see is for price to either sweep out the London low or the London high. Okay, so let's say that we take out the London high, right? So price goes up and bang, we have swept the London high. Now, one thing, we want to be on the 15-minute time frame, okay? Now, how do we know that where price is gonna go next? Okay, so usually when we take out London high, the next draw on liquidity is always London low. Okay, so we are only working with the session highs. So Asia high, Asia low, London high, and London low. Now, what usually happens is that you are waiting for a market structure shift, right? After price has swept liquidity. So that is your basic Judas swing. Now, what happens? Price goes up. You get a stop loss. Well, you get another market structure shift, right? And you get stopped out once again. And price just keeps on pushing up. But how do we know that price is going to go towards this low over here? 96% of the time, what I'm about to teach you, it works. And I'm going to also teach you an entry model to use with this exact strategy that will have your draw on liquidity, correct draw on liquidity 96% of the time. And if you don't trust me, you'll have to go and see yourself. All right. So here's how to know that price is going towards the London low now, since we have swept the London high. And let's just also put this here so it doesn't confuse you. I'm going to go here. Okay, so that's when the London session ends, and then we have this. Now, first thing first, what you want to do is use your Fibonacci tool. All right, so fib retracement. So you want to use your fib from the London low to the highest point. Okay, so we have a sweep over here. So you want to keep your fib over here. Right, that's step one. Now you want to click on your Fibonacci. And you want to turn on 0.79 level. If you don't have it, just type it manually. And you will have this over here. And I have the color of this to green because I know this is like the switch that turns on that bias that price is not going to go towards this low. So here's the thing. What I'm waiting for next is for price to drop lower, lower, and lower. And on the 1 minute time frame, so we're on the 15, right? On the 1 minute time frame, I want the price to close below the 0.79 level. As soon as it closes below the 0.79 level, 96% of the time, price will move towards this low over here. So look over here. We had the London high and we had the London low. Price sweeps out London high, but we never know when is price going to go to towards the London low. And for that, I used a secret technique that no one has ever uploaded on YouTube. And I'm giving it away for absolutely free because I love to teach. So as soon as price closes below the 0.79 level on the 1 minute time frame, your bias is basically towards this low London low over here. So next thing you know, price will retrace a little bit, and I'm going to show you the entry model as well. So over here, you will see that price will go towards that low, and you are done. All right. So with this 15-minute range, on the 1 minute, you're going to have this big range that you can play with, right? So maybe you can look for an entry somewhere here. And of course, as I said before, I'm going to teach you an entry model as well in this video. And you can catch like 1 to 3, 1 to 4, 1 to 2, all sorts of trades. All right. So basically, price closes here, your bias is towards this low. Because 96% of the time, whenever this happens, when price closes below the 0.79 level, it will go towards the London low or the London high. And similarly, let's say that if we invert the chart over here, let's say that the London low was taken out first, right? Then we basically just wait for prices to give us the direction. We are not trying to guess the direction. We are trying to trade with the momentum. And the 0.79 level, it is the sweet spot. It is like this magical spot that whenever price closes above or below it, right? And we have this London high, which is untapped, or London low in this case, right? Next thing you know, when price closes above the 0.79 level on the 1 minute, right, price just goes up. 96% of the time, I'm going to show you proof, all right? You have to watch through till the end to know. And also, again, I'm going to teach you the entry model. Basically, that's it. So now, here are some key things that you need to know, all right? And this is some extra sauce I'm going to drop, all right? So let's just go and remove everything here. So let's say that this is Asia session, right? And we have this Asia session over here. So first thing first, mark out the Asia high and Asia low. And this is how you basically trade the London session. All right, so we're not going to touch the Asia session. All right, we're not trading Asia, but we are going to be trading London and New York. So let's say that you have this Asian range, right? So first thing first, what you are waiting for is a London open. All right, after 2 a.m. New York time. All right, my recording stopped for some reason, but here. So we have the Asia high and the Asia low, and the Asia session ends at 2 a.m. New York time, and then we have this 1 hour lunch break in between, right? So the London session starts at 3. But as soon as we have the Asia range, we can play this setup, right? So over here, let's just mark out, this is the end. And then afterwards, during London, we are waiting for price to, let's say, take out the Asia low, right? Now, if normally you would look for a market structure shift and then you would take your entry, but it doesn't work all the time. It just really works now. So again, we are going to use the fib from the highest, from the Asia high to the lowest point after liquidity sweep. All right. So this is the Asia low, but we are using it with the current price level after liquidity sweep. Now from here onwards, what we are waiting for is price to go up, up and up and up and up. And that's where you can look for an entry. As soon as price closes above the 0.79 on the 1 minute, you look for an entry model and you target these highs. Now, one thing to note is that the Asia high or low must be taken before New York session open, right? So if the Asia high or low are not taken before the New York, then we are going to prioritize the London high and London low, all right? Because London session couldn't sweep out the Asia high or low, or probably it swept the Asia high, but it didn't sweep out the Asia low, or you just simply didn't get the setup, which is right over here before New York. So when that's the case, so let's say price is here and we still haven't gotten close above the 0.79, and now we also have the let's say just hypothetically that we have the London range now, all right? So the London session is over, and let's say that this is the London high and the London low. Now we forget about the old setup because we couldn't get a setup before New York, and we prioritized the London session high and the London session low. So in that case, let's say that price just moves up, takes out London high, then we are simply waiting for price to drop lower, right? We use our fib from the London low to the highest point over here, and then we wait for a 1 minute closure, and then you take your entry model that I'm about to teach you in the upcoming minute. So here is the entry model, all right? So I'm gonna draw this out again for your ease of understanding. So over here, let's say this is the London high and the London low, This is on the 15-minute time frame. Now let's say that price takes out the London low over here. Now we're gonna use our frame from the London high to the lowest point, right? And let me just do it correctly. All right. Oh my God, what is that? All right. So now we have liquidity sweep. So now what we're waiting for is to price to go back up and close above the 0.79 level. Now, what you want to do is that when you have this range over here, right, this Fibonacci tool set up, just drop down to 1 minute time frame and then wait for a closure above the 0.79 on the 1 minute. Now notice here, okay, this is very important. So we have a dealing range from this low to this high over here. Now within this dealing range, oh my God. So within this dealing range, you have to look for extreme fair value gap. So let's say there's one fair value gap over here, and then there's one fair value gap over here. I'm going to take my entry from the extreme fair value gap over here. And I'm going to put my stop right below this low over here. Because whenever price closes above 0.79 level, price is not going to retrace like that, all right? Price wants to seek the liquidity. That is why it has pushed up way too far. And it has also closed above the 0.79 level. All right. So now you take your entry here, you put your stop right below the low over here, and you target the London high. And next thing you know, I promise you, like 96% of the time, price will move towards that draw on liquidity if price manages to close above the 0.79 level. Now, this is basically the entire entry model. Now, let's say that in a rare case, there is no fair value gap in this range, from this dealing range low to dealing range high. There's just no fair value gap, okay? There's just nothing. But there's just like a dealing range. Now, in that case, what you have to do, oh my God, dude. All right. So in that case, what you have to do is, first of all, mark out any fair value gap. So you can refer back to the, let's say, the old dealing range, right? So the old dealing range, let's say, okay, let's just move this like that. All right. So let's say there was this, this another dealing range here, right? Oh my God, dude, this looks so bad, but I'm trying to explain, guys. Just bear with me here, okay? So let's say that there was a dealing range over here from this low to let this high, right? Now we're gonna see what is the extreme fair value gap over here, and if there's one here, then you take it. Now, if that is not the case, you don't have any fair value gaps from this liquidity sweep point till here, which is very unlikely, then what you will do is basically look for another break of structure above the 1 minute and see if there's a fair value gap from low to the high. If there's none, then look for another break of structure and wait for a break of structure and see if there's a fair value gap. And of course, this is just very unlikely scenario, then of course then you can take your entry from that level. Now with that out of the way, I want to give you guys multiple examples and I want to show you guys how well it works, because right now you guys might be thinking, what the F is he talking about, right? How could it be so easy? But this is something that I recently discovered like a month ago, and I've been working on it, and it is just so fantastic. Like, the problem of finding your draw on liquidity is basically over. This literally works on everything: crypto, forex, gold, futures, everything. But I trade it with futures. It presents the cleanest price action, especially when I'm taking an entry, and that's pretty much it. So now let me give you guys some examples. All right, so here is example number 1. And before I give you the example, we need to know the timings, the correct timings that I've fine-tuned for each session, right? So let's go here, and you want to use an indicator. So go into indicators, type in FXN, Asian Session Range by Rob Minty. Now, once you have it on, go to the settings, and these are the settings. So this is the Asia session settings, right? And then we have the London settings over here. So make sure you pause the video and copy them. And then this is the New York settings. All right. Now, over here, what you can see is that we had London low, and we now have London high over here. So very strong liquidity levels are session highs and session lows, and previous days highs and previous days lows, right? but we only utilize for now the session highs because we want to keep things easy. Now what we want to do is use our fib from the London high to the lowest point over here after liquidity sweep. So now what we are waiting for is the price to give us some sign that it wants to go up. Now if I go on to the 1 minute time frame now, you can see we initially tried to break above it, but we failed to do so. But we got a closure over here. And also we have a fair value gap from the inside the dealing range. So from this dealing range low to this dealing range high. Now, since the fair value gap is too big, I would basically just use the 50% of the fair value gap. And right here, this would have been my entry. My stop would go below this low over here. Now, I want to at least get 1 to 1.5 out of this trade. And that's the minimum that I would go, right? And basically, you could go break even after this, the drawn liquidity is hit. Now, usually I don't go break even when I'm in the trade for this specific strategy. I like hold the trade, all right? And I only go break even in this scenario. So for example, we are getting 1 to 1.5 over here. So if price reaches this level, I'm going to go break even. So we have the trade and let's see what happens next. Bang, right there, TP hit. Now, one thing you can also do, and it is something that I avoid, but you can see that we have unswept Asia highs, right? So then what you can do is use your fib from the Asia high that is unswept to the lowest point over here. And now you can also see that we have closed above the 0.79 level of the Asian range. And notice here how we don't have any fair value gaps for now. But eventually price goes up towards that high over here. Now in this case, in this scenario, you know, when we closed above it, we didn't have any fair value gap. We left one behind over here, but we didn't come and fill it up. So this was the fair value gap that price utilized. So as I said before, when price is above the 0.79 level, price will just shoot up. Like it will not retrace at all in most cases. So that is example one. You can see how if you have correct drawn liquidity, trading becomes easy. And yeah, so let's move on to the next example now. All right, guys, so here is example 2. So you can see we have the London low and we have London high. So these are our liquidity points. And what we want to do is use our fib from the London high because it is unswept to the lowest point over here after liquidity sweep. Now let's go on to the 1 minute time frame. Now we're waiting for price to close above it. And that's where we get it. We get a closure. Now there's a fair value gap over here. And then we also form a fair value gap over here as well. Now, so if you missed this entry over here, you could have used this as your entry point. Remember, we are only taking one trades. We're not taking multiple trades in the same setup. Now, are we getting 1 to 1.5? No. Then I'm going to simply just do it here. Now, we can also go for 1 to 2 here, but I like to do it 1 to 1.5. But sometimes what will happen is, let's say you get an entry over here, right? Price will give you more than 1 to 2 and sometimes 1 to 5 even. I've seen some in examples. But over here, you can see that price taps into it and then it pushes up. And eventually it just keeps on pushing up until we take out, I think, Asia highs. All right, Asia high was already taken out. So yeah, that's example 2. Let me give you guys a couple of more examples. I mean, look at here, guys. Let me show you some random examples over here without showing the entry, right? So we take out the London high, use from low to high. Notice what happens here. Price taps into the, probably close at 1 minute and then push down. Then we have one more example over here. London high, price goes above that 0.79, pushes up. Right over here, one more example. Look, bang. Price sweeps London low, have London high as our draw, goes above 0.79 level, and bang. And over here, look at this. Price goes up and then closes below the 0.79 level, goes down. And now in this case, you can see that we marked out from London low to London high because London high was swept. Price failed to reach the 0.79 level during AM or PM session. So we just avoid that setup now. Over here, let's see what happened. Okay, did we close below this 0.79 level? Let's see on the 1 minute. No. See how it filters out the bad trades. We failed to close below it, so there was no trade whatsoever. And price just keeps pushing up, I believe. But yeah, there's just so many examples, bro. Like, I can't explain how well this shit works. Look, we probably closed here or here, and then the draw was hit over here. And over here, once again, you can see that bang, price goes wicks below 0.79 level, and then we eventually hit this. And over here, once again, right here, London high, bang, bang, bang. And this, so this is something that I would avoid, right? We have swept the London low and the London high. Actually, I wouldn't avoid. Why would I fucking avoid? Why did I say this, right? I thought there was just like news or something, but look how this played out, right? It plays out every single time. Like, as I said before, 96% of the time, it just plays out. No matter what happens, except over here, I believe, where we got a sweep. No, this is not a sweep over here. Okay, no, okay. It is a valid example. You can see. And eventually, this is when we get a liquidity sweep, right? So this is the lowest point over here. But again, I believe, okay, we were still in the PM session over here. And eventually, we took out the London highs once we closed above the 0.79 level. It is just crazy how well this works. No one has ever talked about it. London low. London high was swept. We closed below it. And yeah, eventually we tap into this 15-minute fair value gap. And then we push down over here. Now, in this case, maybe when you have taken your trade on the 1 minute, this might have not played out. You might have taken a loss, but it is what it is. You know, you're going to take a couple of losses here and there. But eventually you will see above like 90%, 85% win rate. But draw on liquidity is going to be hit 96% of the time. So over here, London low swept, price goes up, bang, bang, bang. Look what over here, guys. I'm not making this shit up. London low, London high was swept. Price after sweeping. All right, let's do it here. Yeah, see, first we swept London high, but we failed to touch 0.79 level or close below it on the 1 minute. Then we drag the fib to the upside and bang right there. Right, it is just crazy. Like, I can see the examples everywhere. So over here, you can see we swept the London low. We have London high here. Price goes above it, probably close at on the 1 minute, and then we had this and that. Guys, I can show you like so many examples here. Like, it works every freaking single time. Like, that's why I say 96% of the time, right? Your draw on liquidity couldn't get any easier. It is just so simple, so mechanical. Bro, I wish I could like tell you how beautiful this model is, right? London high, London low, price goes up, and then the draw on liquidity is hit. So your problem with daily bias and all that stuff is gone after this video. We have London high, price swept London low, lowest point over here, bang, bang. So let me give you guys some entry model examples as well. All right, so here's another example. We have the London high that is unswept, but we have swept the London low. So we use the London high and the lowest point, and then we wait for price to close above the 0.79 level on the 1 minute. Oh my God. Right. So we initially didn't close above it, but then we went up ahead and closed here. So what is the fair value gap? Where's the fair value gap from this dealing range low to this dealing range high? We have this tiny bit of fair value gap resting around here, but I like to include this gap over here as well with the fair value gap. So this would have been our entry zone, and my entry would have gone below this low over here. As you can see, we were not getting 1 to 1.5 here, so I would just take 1 to 1.5 here, and then I would call my day. We're not going break even unless we hit the liquidity point. We're not moving our stops. We're just waiting for fixed targets to be hit, and eventually it did also hit 1 to 2 RR, which is absolutely crazy. Let me give you guys one more example, and then I'm gonna end the video. All right, here's an example, and I cannot say this enough, but you always want to be on the 15-minute time frame when you are marking out the session highs and lows, because apparently over here, this is a high. Like, this is the high of the London on the 15-minute, but if you go onto the 1 minute, it's gonna look something different. All right. So the way the strategy is like tweaked is that you want to be always on the 15-minute time frame. All right, when you are marking these levels out. Now, of course, you can see that we have the London high here, but we swept the London low over here. Now we mark out our fib levels from the London high to the lowest point of the liquidity sweep. Now we go on to the 1 minute time frame, and we'll wait for price to give us a signal that it wants to go up towards that liquidity point. Now, as soon as we close above it, look at this dealing range. So we have a dealing range low and a dealing range high over here. And also, we have a fair value gap. So this is going to be your entry, ladies and gentlemen. Stop would go below the low over here. And in this case, you could see that we made a lot. Like, you could have made a lot. So let's see how this plays out. Bang, right there. Done and dusted for the day. And probably just went up ahead and took out Asia highs as well. I just believe it did. Let me just see what happened here. So, all right, we have already, once again, we already took out the London, the Asia highs and stuff. Anyways, that is going to be it. Thank you for watching. Take care. Goodbye.